Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about where your future tenants are going to come from. Last week, the US Census Bureau published new data on the migration of people across the United States. It shows some new trends that are, frankly, quite a reversal of some long-term historic trends. If you think back to the time of your grandparents or great-grandparents, they probably grew up on the family homestead. They married and started their own family in the same community and probably the same neighborhood. My father's family lived in the same community on an island for nearly 400 years. They were displaced by the Second World War. Were it not for that, my father probably would have ended up taking over his father's pharmacy and continued the family business. As modern transportation increased and mobility became easier, so too did migration of people. Migration, that is, the percentage of people who move their primary residence, has been increasing generally with each passing decade. That is, until now. In the latest census report, we're seeing a reversal of migration trends in the past decade since the start of the Great Recession. But I don't think you can blame this entirely on the recession itself, because even as economic recovery has taken hold, migration has continued to decline steadily across the United States. If you have a brand new vacant apartment ready for someone to rent, or recently renovated property for sale, people have to be willing to move in order for you to rent your apartment or for them to buy your house. If the mobility in the population is declining, it stands to reason that there will be fewer people looking to move into your property. So let's look at the data. The Census Bureau looked at a data set of 263 million people over 15 years of age. Of those, 238 million did not move in the past year, and about 25 million people did. That's about 10.5% of the population. That sounds like a lot, but it's a significant decline compared with the previous decade. In 1985, nearly 20% of Americans had changed their residence within the preceding 12 months, but by 2018, fewer than 10%. That's the lowest level since 1948, when the Census Bureau first started tracking mobility. So let's look at the data. The largest group of movers by age are in the age range of 15 to 24 years of age, where 17% of the population in that age range moved in the past year. And this makes sense. College choice is a big driver of that need to move. The older you get, the less people move. Only 4% of those over 65 years of age moved in the past year, and 11% of those between 25 and 64 years of age moved. The inclination to move also depends on where you live. The lowest mobility part of the country is the Northeast, where less than 8% of people moved last year. 10.73% moved in the Midwest, and 11.2% moved in the South and the West. Income also seems to be a factor. Those with no income had one of the highest inclinations to move, with 11.55% of those people moving. The lowest percentage of movers were those having incomes above $100,000, with only 8.5% of those people moving. A wide range of explanations have been offered to account for these substantial declines in mobility. Many consider the culprit to be the economic crisis, which locked people into declining value homes. Others attributed it to the huge differential in housing prices in expensive cities. Some economists contend that job opportunities have become similar across places, meaning people are less likely to move for work. Others see rising student debt as a key factor that has kept young people in their parents' basements. Now, a new study from the Federal Reserve Bank of New York suggests that other, more emotional and psychological factors may be at work. Significant reason for the decline in mobility is that many of us are highly attached to our towns. Nearly half of those in the survey, that is 47%, identify as strongly rooted. The rooted are disproportionately white, older, married, homeowners, and rural. Their reasons for not moving are more psychological than economic. Proximity to friends and family, their involvement in local community or church. Another 15% identify as stuck, lacking the resources or ability to move. The stuck have less formal education, they're in worse health, and they're less satisfied with their jobs. In addition, they're more likely to live in cities and live relatively close to family members. The reasons for not moving are mainly economic: the cost of moving, the affordability of housing in other areas, the difficulty of qualifying for a new loan, and the perception that there's less opportunity for them elsewhere. Taken together, the stuck and the rooted make up a huge fraction of the population, more than 60%. The next largest group of movers are those between 25 and 65, having an income between $40,000 and $50,000. Only 3.7% of the people who moved in 2018 came from outside the country. Of those coming from abroad, men were more likely to move than women, with men making up 3.9% of those who moved, compared with 3.4% who were women. 81% of people who moved stayed within the same state, and 15.5% of those who moved went to another state. So if you're looking for new tenants and you can target your product offer or your marketing message, it pays to take a closer look at the demographic information contained in the census data. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.